Hey guys, Jonathan Rose, owner, Masters in Trading. In this video, we're going to talk about three things. We're going to talk about 1, the S&P futures, 2, oil, and 3, Schwab, commissions. Let's get going. So first things first. If you're a follower of the channel, if you're a follower of my work, you know I am a huge believer in weekly highs and weekly lows. I would not consider myself a technician. I think technical analysis is one feather in a trader's cap. I think people depend on technical analysis too much. I want to use it to keep things very simple. So I just want to show you S&P futures. If I move it to a weekly, kind of an orderly move. So we had these 4 weeks, which were pretty much the same. S&P futures break out. This becomes support. So we have resistance. And then it gets right back down here. Pretty much the same lows. Follow your weekly highs and lows. Follow your daily highs and lows. If I now move you over to the daily, you'll see the sell-off got right down to the 200 period moving average, which is pretty much the same level as all these lows. These are all those weekly lows. Not a surprise that we bounce right there. Then the market rallies. The 100 period is 29.30, but more important than the 100 period is going to be all these highs. I would suspect this is going to be the high of the day, which will be about 29.41, 29.42. Right now the market's 29.38. Keep it simple, guys. Going into next week, use that 29.42, 43 as resistance. Major support. If we get down there again, that's a pretty big sell-off. But you could almost use this as like your line in the sand. Above 29.42, get bullish. Below there, stay bearish. When we're bearish, that means we're bullish volatility or bullish the VIX. Oil. Oil actually sold off with the overall market. Last trade, 52.89. WTI CL. I am uber bullish oil. And here's the reason. At Masters in Trading, we look at things using a relative value approach. Nothing is ever cheap. Nothing is ever expensive in isolation. Something can only be cheap relative to a highly correlated instrument. So if we look at oil and compare it to gold, here's gold GC on Thinkorswim. I'll hit my beaker and then I'll pull up our proprietary gold relative to oil tool. And here's what it looks like. Gold relative to oil going back to 2016. At the end of 2018, it traded about 29 or 30. At that time, oil was very inexpensive relative to gold. You would have done extremely well buying oil and selling gold. Well, sells off, gets right back up here at this time. Go back on the YouTube channel. You're going to find videos that says, I am uber bullish oil. As this sold off, oil rallied. Well, looky what happened again. With the late big sell-off in oil, we are getting back up to this 30 level, which is making me extremely bullish black gold oil. So what do? You can do a couple of different things. You could just go buy oil futures. That's pretty easy. You could buy oil-related companies. So many companies are influenced on the price of oil. You can do a relative value analysis to find which oil companies are inexpensive relative to the others. Nevertheless, the overall theme that we're going to be taking into next week is oil is very, very inexpensive. Every Sunday night, I share trade ideas with the members. There's going to be long trades in oil-related companies. Next, Charles Schwab. I put out a video a couple of days ago as soon as Schwab got rid of all commissions. Commissions down to 0. Think of it this way, and this is what's so confusing to me. Schwab, before they came out with their announcement, did their due diligence. They knew what effect it was going to have on the overall company going forward, but also on the stock. So why in heck would they ever shock the market like this with the stock trading at 42 and now it's trading at 35? I understand that revenue is going to be less because of commissions are going to be down, but this is going to affect Schwab probably the least out of the major online brokerages. I personally think a $7 sell-off, which is almost 20% after prepared remarks, doesn't make sense. It's just way too much. So for that reason, right now, I am long Schwab. And I'll even give you a head start on this one, guys. Exactly what I'm in. If you go out to November, I am long the 37 calls and 38 calls. You could see my position down here. 37 calls, I'm long 10. 38 calls, I'm long 10 as well. The trade price, 95 cents. Right now, the mark's 95. I'm broken even on this one. But here, I'm down 50%. 60 cent last trade, got in at $1.20. I will hold this trade for 42 days or until I can take off a big profit. I'm sharing this with you because you can get in for much better levels than me. I love this trade. I'm going to stick with this trade. If Schwab wants to trade down to 32, I'm going to get my third tranche in. This trade makes a lot of sense to me. Let's see how it plays out. Hope it helps, guys. My name's Jonathan Rose. I'm the owner of Masters in Trading.